Hey folks, here's another challenge update. Last week, Alphabet came out with earnings and they disappointed. I put in my trade on this green candle here, and the next day the stock gapped down. It ended the week at roughly $96, which is this green candle here. And luckily, that was within my wide spread between my put and my call. So my put spread expired out of the money, and my call spreads as well. After Wednesday and Thursday last week, I was expecting the stock to close below this range here, but it looks like it came back in at the end of the week, and now we're sort of testing the bottom of that range, which is interesting. So because all of my options expired out of the money, I was able to make a lot of premiums last week at $552 Canadian, thanks to the really high implied volatility, and also thanks to, of course, Alphabet not, dumping like 20% like Meta did. Because if that would have happened, then this would be a very negative number here. So the good news is I made a lot of premiums last week. The bad news is Alphabet dropped from 101 to $96, and I have 300 shares, so that's quite a lot of money. Overall, I am down 1,400, which means I am back in the red. You can see this zigzag pattern that seems to be going on. So maybe after this week, I will be back above zero. We shall see. Before we take a look at this week's chart, my overall thought with Alphabet is I still think it's a good company, but it's not as undervalued as I thought it was because they did miss pretty bad on earnings. They only made 106 earnings per share, whereas Wall Street was expecting 126. So that's a pretty big miss. TipRanks is still giving this a strong buy based on 30 analysts, and analysts are still expecting this to go about 132 is the consensus. I've mentioned that I think Alphabet was a $130 stock before. Now I think it's worth about 120. So even at today's price of 94, that's still undervalued. But let's take a look at the chart and let's see where Alphabet is likely to go from here. It's Monday morning and it looks like the stock market is going down in general. You can see all the indexes, SPX, Dow Jones, NASDAQ, but we're still very early into the day. So by the end of today, everything could be back in the green. You never know. But right now, Alphabet is down about 2%. So it fell from like $96 to $94. And it looks like we've just broken out of this channel, this blue channel here that I've drawn. The stock has been trading within this channel for a while. Sometimes it peaks above like that. Sometimes it peaks below. But then afterwards, it goes back in and then it goes back in. So today we've so far fallen a little bit here, but this could very well just lead us back in later. So at this point, there's no clear indication whether the stock will likely go up or down. We are below the 21-day EMA, this blue line in the middle. So that's a bearish sign, but at the same time, we haven't bounced down from the bottom of the channel. Like last Friday was a pretty green day and that was fairly bullish. So I'm kind of neutral going into this week. I think what I'll do is sell like an at the money put option just because I haven't bought Alphabet yet below $100. My 300 shares of Alphabet I bought at 108, 109, and 104. So if I buy it at the current price right now, which is around $95, then that's going to lower my average cost down quite a bit. So let's take a look at the option chain. And the IV is still fairly elevated because after earnings, the stock can still be more volatile than usual for a couple of days. So for the puts, I'm going to sell this $95 put. If this gets exercised and I buy 100 shares at 95, that will bring my average cost down from 107 to 104. And then maybe I will also sell an $89 strike put. So that's two puts. And what I'll do is I will separate the puts and the calls this time so they fill faster. So the puts, I'm already going to make pretty good money here at about 250. And then for the call, I'm thinking around like 103 or 104 because there is pretty strong support. If I make this like at 103, right here, there was 103 was pretty strong support on the way down because it was very hard to break through that level earlier this year. But since we've broken through that, you can see now that line acts as resistance. And there's been a couple of times here and here where the stock tried to go above that, but it couldn't. Over here, it peaked above. That was last Tuesday. But now that we know Alphabet's financials are not as strong as expected, it doesn't really make sense for us to go back all the way to the previous highs like that. So I think if it goes to 103, then it's overextended and we're likely to get a pullback again to this channel here. And, there's not a lot of time from now until Friday anyway. So looking at the slope that Alphabet likes to go up, it seems to be this angle. We have one there, we have one here, and we have one here. So if I measure that here, you can see it's not even close because this blue dotted line is Friday. So if we go at that angle, then we'll end the week somewhere around 100. So I think 103 is pretty safe. And again, even if we get there, we'll likely get a pullback soon after. And I can use that opportunity to buy back in. So 103, I can make about 7 cents. That's not too bad. This is a covered call. So I have 300 shares. I will sell 3 quantities.
Order filled.
Okay, looks like the call option has filled and the put options filled as well. Okay, so the put options, there are 2 puts at 95 and 89, and that's $253. The covered calls, I'm gonna make $7 times 3, so $21. So if I add that all together, the $21 from the covered call plus the 2 puts at $253, and then I'm gonna minus $3 here for commission. So that's $271, not too bad. Assuming I don't close any of my positions using the current exchange rate of 137, that's going to be 371 Canadian dollars. So again, I'm trying to take advantage of that implied volatility that's higher than normal at 44% today. So here's what my setup looks like going into this week. This red bar represents today, and then we have Tuesday, Wednesday, Thursday, and Friday. Wednesday is FOMC meeting, so expect a big move on that day. But basically, I have my covered calls up here at 103, and I have a naked put at 95. So ideally, where I want Alphabet to close at is between these 2 lines, somewhere between $95 and 103, and all of my options would expire out of the money. I also have another $89 put down here, which has a really high probability of expiring out of the money. The 95 naked put, that's a coin toss really. So if I end up buying another 100 shares at $95, then that would lower my cost basis by a few dollars. So let's see what happens. I'll keep you guys posted. Thanks a lot for watching, and I'll talk to you in the next one.